Three benchmark stock indexes closed with confident gains yesterday. However, some assets lost their shine. How come? You will find out it from this video. Wall Street indexes closed with notable gains on Wednesday, having lost 400 points on Tuesday. The Dow Jones recouped all losses yesterday and closed 1.28% up. The Nasdaq closed with the biggest gains of 2.59% and the S&P 500 rose 1.56%. All of them traded sluggishly in the New York pre-market. The indexes perked up cautiously in the early American session, and the S&P 500 is expected to trade in the intraday corridor between 4,120 and 4,210 points. As we expected, Wednesday was a lucky day for Wall Street. Albeit economic data and strong corporate reports encouraged a moderate rally. Solid reports of Starbucks, CFC, and Moderna added to the overall optimism, and their revenues for the second quarter surpassed the market consensus. Besides, CFC and Moderna upgraded financial forecasts for the third quarter. As for the economic calendar, US durable goods orders expanded 2% in June, higher than expected. The ISM Services PMI increased in July from a month ago. The index jumped to 56.7 against 53 points in the consensus. Investors view these indicators as a sign of improving business activity. Nevertheless, the market is trading cautiously today, waiting fresh weekly unemployment claims. Today, the U.S. Labor Department reported that the number of Americans claiming first-time insurance grew by 6,000 last week to 260,000, higher than the expected 259,000 new applications. On a Thursday, ConocoPhillips upgraded annual yields for its stockholders by $5 billion after its quarterly profit came in beyond the forecast. Now, ConocoPhillips plans to refund $15 billion to stockholders this year. Shares of the oil company surged 3% in the pre-market. Alibaba stock leapt 5.1% in the pre-market after the Chinese high-tech giant topped expectations in terms of profits and revenue. The company announced a flat growth in a quarterly revenue, though analysts had projected a decline. The US dollar index failed to overcome the level of 106.90 today. It's a trading lower. The index has consolidating at around 106.30 and it's likely to trade in the corridor between 105.90 and 106.70. On a Wednesday, the US dollar index rose a bit in light of statements by some Fed's policymakers, and they spoke about the extra efforts needed to curb inflation. Fresh remarks did not change the fundamental picture. According to James Bullard, there are no clear-cut signs of a recession in the US economy because the labor market looked at strong employment growth in the first half of the year. He reckons that the central bank would raise interest rates by another 1.5% to push down inflation that accelerated to 9.1% on a year in June. Today, the pound sterling has come under the spotlight as the Bank of England increased interest rates by 50 basis points for the same reason, to struggle with inflation. Inflation in the UK skyrocketed to 9.4% in annual terms in June, and now the Bank of England estimates it could conquer the peak of 13% at the year end, and today the regulator ventured into the sharpest rate hike since 1995 following the moves of the US Fed and the ECB. In this context, the pound sterling weakened against the greenback. The US dollar might receive a boost tomorrow because of a strong non-farm payrolls, and the USD card pair is losing ground despite opposing the greenback's rally. The intraday corridor for the pair is defined between 1.2820 and 1.2900. The loonie is affected today amid a storm in the oil market. The commodity-reliant currency was vulnerable to a fall in oil prices on Wednesday. Crude oil plummeted after weekly official inventories data showed that US stocks unexpectedly expanded by 4.5 million barrels to 426.6 million barrels. Under such conditions, WTI slipped 3.2% to trade at $91.41 a barrel, and Brent crude lost 3% to trade at $97.53 a barrel. No analysts foresee possible breakout through 90. At the moment of recording this video, both benchmark grades are trading in the red. What is going on in the crypto market? On a Wednesday, Bitcoin climbed 1.78% to trade at $23,429. However, the crypto did not cross the key level of $23,500. Today, the token reversed downwards. The flagship crypto has been trapped in a wide range between $20,000 and $24,200 per month. Neither buyers nor sellers are able to break any of the borders. Despite a revival of the risk appetite, the news on the crypto market is not the best. The saga about a hacker attack on 8,000 crypto wallets is still underway. The cyber attack entailed a loss of more than $8 million. On the back of a slump in the crypto market, persistent hacker attacks, and insolvency of some crypto platforms, Robinhood Markets announced a 44% fall in revenue in the second quarter that forced the company to fire 23% of its personnel. Despite bad news, Bitcoin has developed strong immunity this year and seemed to neglect the negative background. Now it correlates with the Nasdaq. Today, the token is expected to test the high of 22,500 again. If the price shows resilience, it will rebound to 23,200. Otherwise, the crypto will slide to $22,000. We hope that our market reviews help you develop the right trading strategy to ensure steady profits. Earn in financial markets with InstaForex and don't miss our regular market reviews.